Hello and welcome to PQ Prime. I am Hiral Dadia. In a story that continues about India's biggest merger, that is HDFC as well as HDFC Bank, we get you continued coverage only on BQ Prime. In fact, as we know, 42 shares of HDFC Bank is what you will get for holding 25 shares of HDFC. The announcement in terms of the effective merger date is out, which is the 1st of July 2023. The expected record date is the 13th of July, and HDFC will hold trading on that day, whereas the expected trading date for the merged entity is the 17th of July 2023. So lots brewing in the banking space. To discuss more on this, we have Sudip Bandyopadhyay, Group Chairman at IndiTrade Capital, joining in. Sudip, good morning and welcome to the show.
Good to be here.
Always a pleasure to speak to you. Sudeep, my first question coming to you is overall, the much awaited announcement is something which is through specifically from a date perspective. I mean, everyone knew this was going through. What, according to you, would it mean for the investors of HDFC as well as HDFC Bank?
Well, I think this was a long-awaited, initiative. I think market has been talking about it for last maybe 10 years. But people were confident that at some point in time this will happen. Then when finally it got announced, it was a vindication of the line of thinking that eventually HDFC will merge into HDFC Bank, and probably that's the right thing to do. At a certain size, an NBFC becomes a little too unwieldy for the liability side in particular to manage, and that's what I think the regulator also feels, that the liability side gets better managed when it's under a bank structure. And that's the reason we saw the regulators supporting wholeheartedly the merger. I think this is the right destination for an entity like HDFC Limited, which has done pioneering work in housing finance, and generations have benefited through the work they have done, pioneering work they have done. As far as the bank is concerned, this was one missing piece, obviously, because HDFC was there, and HDFC being a sister concern, and the promoter, they were not competing in the mortgages. So HDFC Bank didn't have the mortgages business as such. And now with HDFC getting merged, the bank will be a full service bank, even with mortgages included. If you look at the sheer size, physical size, I think HDFC is much smaller entity vis-a-vis the bank, and with 4,000 employees getting into probably more than 150,000 employees of HDFC, it will not have too much of an impact in terms of manpower. But I think the culture and the service orientation which a mortgage business has, and which HDFC has demonstrated over the years, will come in inside the bank, and I think they should look forward to a great business getting developed inside the bank. So as a bank shareholder, I think if you have a long-term view, I think it's a fantastic thing. There will be short-term challenges on the SLRs, CRRs, and things like that, and there are some challenges on divesting of certain assets in a certain specified time as warranted by the regulator. But these are very short-term issues. I think if you look at a 6 to 12 months time horizon, it's a great thing which is happening to HDFC Bank and for HDFC Bank shareholders. Also from a HDFC Limited shareholder point of view, this is probably the best option for them, and that's what is happening. So I don't think there is any cause for complaint. Little bit of turbulence, little bit of volatility, which we have seen since the the merger was announced. I guess it was par for the course.
Absolutely, part for the course. And if you see, in terms of the stock price performance as well, since the time the merger has been announced, if you see, both the stocks haven't moved since then. I think April 2022 is, when it was announced. And if you see in terms of the foreign holdings as well, they have declined since then as well. I'll come back to that point a little later. But before that, if you see in terms of the investors, as we were discussing, that we know what the swap ratio is looking like. But what happens, Sudeep, according to you, in terms of if an investor is holding less than 25 shares of HDFC? I know we will await an announcement from them as well as to whether a fraction share is something that will come in, but is that something that could be anticipated?
Well, I think in every merger, when there's a exchange ratio, some amount of fractional shareholding issue does crop in, and the board will decide how to settle that. 30th June, I think when the boards are meeting, I'm sure they will announce. But I think the problem will not be at 25 level or less than 25 level. Problem will be when somebody is getting less than one share of HDFC. And that probably will not happen. What will happen? Let's say somebody holds one share of HDFC Limited. Now he will get 42 divided by 25, but still it will be more than one. So maybe he'll get one share and the money for the fractional entitlement which he or she has. We'll have to wait and watch. Multiple boards have handled this issue in a different manner, but probably the most logical way will be to give the shareholder the rounded number of shares, and the fraction should be settled in cash.
Right. So this is something we should wait and watch as well. But overall, if you have to look at from a valuation perspective, from a merged entity point of view, how are you looking at it in terms of as is an HDFC bank right now and the merged entity? Do you think there is good amount of valuation, gap where there is an upside, upgrade coming in?
Absolutely. As I mentioned that, I have no doubt in my mind that there is a significant upgrade somewhere around the corner. Now, whether it will happen now or a few months down the line, I can't comment. Market is at an all-time high, but look, HDFC Bank hasn't moved up much. And even if you compare with other leading private sector banks, HDFC Bank have definitely not performed the way, as far as share market price is concerned, the way it used to perform. It used to be the leader of the pack. They used to enjoy the best possible multiple. But post announcement of the merger, because of the uncertainties around it, and also certain technology challenges which the bank faced over the last few years, where the regulator came down upon them and all that, the valuations were subdued for HDFC Bank. But I think things have, on the technology front and the process front, things have been streamlined quite a bit at HDFC Bank. And this merger, as I was mentioning, brings in the mortgage business, which was the missing piece in HDFC Bank's, bouquet. With all this, I think it becomes a much they entity, 18 lakh crore plus asset book. And a matching liability book. They have been working on liability mobilization in a big way. They're focusing on CASA, they're focusing on raising funds from other sources. Obviously, they need to do that because they need to support HDFC, erstwhile HDFC Limited's mortgage business. So they are gearing up towards that, and I think the combination will be a fantastic entity in the financial services BFSI space. With a significantly higher valuation compared to what we see today.
Right. So with this, the other aspect that comes in from an investment perspective is what happens with regards to the FIs, because since the announcement of the merger to now, the FIs have reduced their position. However, do you see any headroom expansion that could be happening from a combined entity perspective?
Well, I think FIIs will definitely be interested in taking position in the merged HDFC Bank. Of course, the headroom is a factor which one has to monitor: who gets in before, who gets in late, tries to get in late, and things like that. So that's a bit of a challenge. As far as the multiple indexes are concerned, the weightage and things like that will have to be looked at once they are rejigged. But it definitely will remain a very attractive proposition for the long-only funds, undoubtedly. It will remain a very good proposition for the sovereign funds and other long-term funds, definitely. As far as the funds which are arbitrage kind of fund, or the short-term funds, it will depend on the headrooms and multiple other things, as we always seen for them. But undoubtedly it will remain a very, very attractive proposition from a FII investment point of view.
Right. And I think, we were just talking to one of our colleagues as well, where clearly the indication is that probably the headroom for foreign investors could actually expand to 18% in the merged private lender once HDFC and HDFC Bank merger becomes effective the 1st of July. And this is taking into consideration that the holdings have fallen in both. And it stood at around 64.69 in HDFC, whereas around 68.76 from a year earlier, and it fell from 68 to 65.74 in HDFC Bank. So this is going to be an interesting aspect that we will be watching out for. The other point, Sudeep, comes in is who is going to be replacing a HDFC on Nifty, right? Because that's something that everyone's eyeing as to, and a lot of names that have been floating around. But the key over here is that the replacement that will come in is going to be from Nifty Next 50. What's the sense that you pick up? Because HDFC and HDFC Bank are institutional stocks or a part of the benchmark indices in India as well as globally. So an impact in terms of Nifty 50, Nifty Next 50, or even for that matter, Bank Nifty, all of this will have to be taken into consideration.
Well, I think, I'll leave the Bank Nifty part for the second half of my comment. If you look at the index per se, I think there's one stock which unfortunately is not in the FNO yet, and that probably deserves to be in the FNO, that is DMart. Of course, it has to be first come in the FNO, then it can come in the indexes. So if that does happen, I think that they are the fit candidate for inclusion. Because it's the sheer market capitalization, the size warrants that. But assuming that doesn't happen now, I think maybe the JSW Steel or a L&T Mindtree can be looked at as far as inclusion is concerned because of the size, because of the free float and things like that. But yes, this is an area of immense interest because a lot of flows will naturally come into the stock, which gets included, and it gets into a different pedestal, of course.
Right.
As far as Bank Nifty is concerned, I think it's very difficult to replace one of these the giants, and there we'll have to see how this gets replaced or the weightages get reassigned. We'll have to wait and watch.
Absolutely, because from a Bank Nifty perspective, if you talk about the merged entity, that will actually hold little more than 46% weightage in terms of Bank Nifty, right? And I think there's a cap in terms of 33%. That's the maximum that is allowed as well. So clearly, we'll have to see how that is capped, and they will also have to go ahead and cap weights of then ICICI, Kotak, and SBI. So all of this will have to be redone as well. So I think this is again going to be a very interesting aspect we need to watch out for from a market perspective. The last thing I have on HDFC, Sudeep, to talk to you about is overall in terms of the NBFC space, right? Once HDFC actually goes out, how does the non-bank housing finance space get restructured? Because clearly HDFC is one of the biggest participants in terms of construction loan financing.
Absolutely right. I think that's the biggest question, and that's the biggest opportunity from an NBFC and non-bank lenders perspective. I would say HDFC was a pioneer, and I think every recognized builder which we see today around us had been financed heavily by HDFC Limited at some point of time or the other in their journey, and maybe even now they were heavily banking on HDFC Limited for construction finance. And land purchase as well. Now, banks don't finance land purchases. Banks have limited and less exposure on construction finance. So this is an entirely new area which is opening up for the NBFCs and the larger NBFCs at that. Of course, this is a very, very specialized business where HDFC had their expertise, having both the mortgage book as well as construction financing and land financing together. They had a control over the entire process, and their asset quality was pristine over the years. So this has to be carefully done, but it does definitely open up an opportunity for a structured and well-organized lender with strong process and systems to fill in the gap I think this is one area which will be keenly watched, because the housing sector will need somebody to finance certain things which HDFC was uniquely positioned to do and was been doing successfully over the years.
Right. So I think that's a space. So who do you think could be a contender there, who could be, probable companies who could see gains coming in?
Well, I think it's very difficult to say. Look, Piramal Finance was in that space, but I understand they're trying to get out of that space. There can be a lot of NBFCs who have a strong balance sheet and access to a lot of funding can get into it. But at this stage, I really don't have a name to share with you. I just don't know who can take this space.
And Sudip, my last question coming to you is in terms of S&P Global. They've gone ahead and actually raised the standalone credit rating of SBI, HDFC Bank and ICICI Bank. What would this actually mean for the sector? Because the SBI part of it is an interesting one as well, because if you see the sovereign rating in terms of India, SBI has moved past that, right? And this is for the first time and very rare. What does it actually tell you?
For the entire BFSI sector, and we have seen this happening. This probably was on the cards, I'll tell you, because the way the banks have asset quality has improved over the last 1.5 years. The way the loan growth has happened, the balance sheets have got strengthened. The fundraisings have happened at multiple levels, either through strategic disinvestment of stake in subsidiaries or through different long-term bond raise effort, or even capital raise through multiple channels. The balance sheet has become very, very strong. The sovereign is a completely different ball game. It's got multiple other issues. So this has happened in multiple countries, in multiple geographies, where entities, specific corporates enjoy a better rating than this country of their origin or their home country. So this was bound to happen at some point of time, and has happened. It's excellent news for the entire BFSI sector, and it kind of certifies the good work which Indian large banks have been doing.
Right. So I think that's good. And these are going to be interesting times as well for the banking space from here on. Thank you, Sudip, so much for joining us on the show and giving us a candid view of what could be on the cards as well. And investors are absolutely in a wait and watch mode from here on. Thank you. Stay safe and speak to you soon again. So that's with regards to where the entire banking space goes, specifically the mega merger that we have been talking about, the HDFC twins. And clearly, we were just talking to a couple of technical analysts as well, who, in terms of if there is any arbitrage opportunity that emerges out of this, and it's hardly a percent that we are seeing from that 25 to 42 kind of a ratio. But overall, good synergies that are in place, and as analysts are mentioning as well, that clearly a re-rating candidate in terms of the merged entity that could be on the cards. So overall, a good growth story in the making for the Indian banking system. That's all that we have on this edition. Thanks for watching, and lots more lined up on the other side. Please stay tuned.